Major U.S. stock averages were grinding higher Friday as a number of blue chip stocks touched multi-year highs. Now, Kenny, the S&P 500, of course, topped 1,500 again today. Are we due for a correction?
We are. I think it's topping, it's churning, it's teasing with 1,500. It can't seem to have enough energy to go through it, which makes perfect sense. The market's had this tremendous move over the last 3 weeks, really, but since the lows of December, we're up 11 or 12% with no real pullback and no real consolidation. So no one should be surprised if the market consolidates. Quite honestly, as a long-term investor, you want to see the market consolidate. You want to see it come back. And I think the action, the fact that we can't, we've broken through, but we've stalled. We've broken through and stalled. And so all that tells you is it needs to catch up with itself, right? The market needs to take a breather.
And when we see this consolidation period really going through into next week, are we expecting some sideline money to be coming in?
Next week is a big U.S. macro data week. There's a lot of data points out, and if they continue to be positive, the way that we've seen some of the more recent reports be positive, that could give it enough push to move forward, right? But people are going to have to really get excited about it. Now, that being said, it's also still earnings. Although earnings are starting to wind down, we will have a number of big companies next week that will report. That will take some of the focus. The whole Washington debate has now been pushed off for another month because sequestration talks are now going to be the first topic on the agenda, right, in March. And so they've bought themselves a little bit more time in terms of Washington. The market's giving them a hall pass at the moment, but if it senses that they're going to run into a problem, I think the market will punish legislators by really kind of selling off. Investors will vote with their feet.
And as you said, next week's going to be a big macro week, and also the FOMC is going to have its first meeting of the year. Are you expecting some increased volatility ahead of the meeting?
No, because I don't think anyone suspects that the Fed is going to say anything that they haven't already said, right? So I think it's already is already baked in. If people started speculating that for some reason the Fed's tone was going to change or that they were going to raise rates, which they're not going to do, then I think you would have more of that. But I don't think anyone's really expecting anything out of the FOMC other than more of the same, right? They're sitting there, they're pumping the system with money, which is a little bit conflicted because, on the one hand, the government's telling us, look at how great we are, look at how great we're doing, everything's coming up roses, but yet the Fed is still pumping us with money. And so that's a little bit of there's a conflict there. Because if we're doing that well, the Fed should back off. The fact that the Fed's not backing off sends a different message.
And with GDP numbers and the big job report coming out next week, is the market secretly hoping for some mediocre numbers to come out in hopes of guaranteeing more continued Fed support?
Well, listen, the market loves the Fed support, right? They love the sugar because that's exactly what it's been. And this rally that we've seen is really based on the sugar that they're supplying. Now, that being said, I think GDP is expected to come at 1.2. That's what they've been talking about. That's not going to be a surprise. The surprise will be either a miss to the downside or a surprise to the upside that it comes in stronger than expected, right? But my suspicion is that it's going to come in kind of right in line. I think the jobs number is the one that is the bigger wild card, right? ADP will come out on Wednesday. That'll give us a preliminary sense of what they think is happening. But listen, don't forget, sometimes those reports, ADP and non-farm payroll numbers, they differ completely. And so there's not any real rhyme or reason. But I think we need to see jobs in excess of 300,000 to make any headway. We're not going to get that. I think the consensus number is 165. That's a great number. I hear you, but it's not nearly enough to get us out, right? And we're still hearing, by the way, a load of job layoffs, right? American Express has announced layoffs. A lot of the financial industries announced 16,000 layoffs in the first 3 weeks of the year, just in the financial services industry. And so, it's frustrating to feel real positive, but yet the market is kind of looking out. It's a discounting mechanism, right?
So any chance next week that maybe long-term investors will have an opportunity to jump in and take advantage of lower prices?
Well, I think they will, right? Whether it's next week or the week after. But I think if you're a long-term investor, you want to see the market pull back. I for one, don't think the market's going to crash, right? I'm not calling for that at all. But if the market pulls back 3 or 4%, that's going to be an opportunity for the long-term investor. Don't forget, as a long-term investor, you're either a dollar cost averager or you're just a consistent investor, that's what you should be, right? Long-term investors should not be buying them and selling them, buying them, selling them. You might as well give it up if you're doing that, right? It's one thing to accumulate and be a long-term investor, have patience, take advantage, take more advantage when there's a sale going on, and just do a little bit less when you think maybe you're at the highs temporarily, which I think is where we are.
And for next week, in terms of all the macro data that's going to be coming in, do you think that there's a possibility of some dips that sideline money could take advantage of?
Well, it's going to depend on the data, right? Now, today we saw the housing numbers today were not so good. Next week we're going to get more housing numbers, right? On the one hand, they're telling us how great housing is, but yet some of the housing reports come in still mixed. So there's a mixed message going on there. I think what's going to happen is if any of the macro data next week is flat to negative, that's going to be your chance, because you will see the market back off a little bit, and then that'll be your chance to kind of put some money to work. Don't rush ahead. Be patient. Patient is always a good thing. I think we will see the market kind of give a little back.
Thanks, Kenny. This is Andrea Say reporting for The Street.